let's meet Taylor. Taylor is going to be our client, okay? So throughout this whole next 2 days, we're going to be helping Taylor throughout all his life events. He's going to be your lifelong client, and every single year, every single life event he has, we're going to be helping him throughout the whole process. Okay, so Taylor, he's going to be your new client. He just graduated from college, he got his first job, and now he's filing his first tax return. Okay, but he doesn't really understand taxes. He's never really had to deal with filing tax returns before. So he goes to you, he's your client, he's going to say, I don't understand how this tax stuff works. It seems like there is so many. So what we do is, remember, we went through the buckets. We went through all the different buckets. So the first thing to do is explain to him how different income is considered in each bucket. And for Taylor, because he's worked at one job, he has his first job out of college, his main bucket is going to be earned income bucket, which is his wages. So anything that he earned from being an employee of a company. So let's go through this. Taylor gets his first paycheck. His gross pay is $4,166. Now these are different taxes that's being withdrawn from his paycheck, okay? But what are these taxes? So I blanked it out. Can anyone guess what these taxes might be?
I'm not sure. Is it the FUTA?
You have the gross pay. You're going to have federal withholdings. So that's what we discussed in the third phase of preparing the tax return. And then you have FICA, which is Social Security, Medicare, which are these two amounts right here. And then depending on the state that he lives in, there might be state withholdings. But I'm going to say that he lives in a state that doesn't have any state withholding, just to make it easier, because adding state just makes it a little bit complicated. So certain states like Texas, Washington, they don't have state income tax. Okay, so you take his gross pay minus all these taxes that he's paying. That's what he's bringing home every single paycheck. Okay, so what we want to understand is, and what we're going to tell Taylor is that he's going to say, hey, I'm paying so much in taxes. Look at all these different taxes. We have to be able to explain to him what these taxes mean. So the first one is Social Security. What this is that it's a flat 6.2% on his wages, but then there's a cap every year where once you reach that in income, you don't pay this anymore. Okay, but Medicare, this is unlimited. So no matter what their income is, you're always going to pay this 1.45%. Okay, so letting the client know that these is pretty much automatic. Like, we can't really change this. Employers are always going to withhold this. Okay, this is the part where we do have a little flexibility on depending on how much the client wants to withhold. So they could say, oh, I want to withhold more, and it could go up to $700. Or they could say, I want to withhold less, and it's only $300. Okay, but the problem is that if they withhold too little, that's when they owe on the tax return. Okay, and if they elect to withhold more and it's too much, then that's when they get a refund. Okay. Now that Taylor's worked the whole year, this is his total pay for the whole year. Okay, $100,000. This is his total federal withholding, his total FICA, and total Medicare. Okay. Now Taylor comes to you and says, hey, I'm ready to file a tax return. Help me file a tax return. So he gives you the W-2. The W-2 is the final form that the employer gives to all the employees, and it gives out all this detail. So this is what you actually have to input into the tax return itself. Okay, so to help prepare Taylor's first tax return, what is the taxable income, what is the tax liability, and what is the balance due and refund, right? So let's kind of go through his situation right now. Is that we know his total tax brackets, so that's what we talked about, and he's taking a standard deduction, okay? He doesn't have any charity, he doesn't have any of those other deductions. So we know he's gonna take the standard deduction. What do you think his taxable income is right now? Okay, so that's the taxable income. Now, yeah, 85,000. Now, I didn't want you to have to do the tax liability calculation. I did it for you. So it's 13,841. So you see that based off this income, when you do the actual tax bucket or tax bracket calculation, the tax liability is 13,841. And if you see, the withholding is actually exactly 13,841. So what does that mean? that means his balance due and refund is going to be 0. Okay? So because he withheld just enough to cover the actual tax liability. Okay? So congratulations, you finished. You helped Taylor finish his first tax return. Okay? But what else? What else can we do? So let's just assume that we just finished all of 2024. Now we're on March of 2025, helping him prepare his tax return. You remember that the tax return is actually due April 15th, so 1 month later, right? What else can we recommend to Taylor on his 2024 tax return? Okay, so one thing about taxes is that most of the time by December 31st, whatever your total income is that year, whatever deductions you have that year, that's what the deadline to do all those things is December 31st. But there are few things, like 3 things that you could do still within this filing deadline that you could still do here, but still apply it to 2024 taxes.